Hi there. In this video, we will shift the gear in our discussion from talking about the techniques in fraud accounting, the evidence we collect in forensic accounting, and we shift the gear to the different types of fraudulent transactions, especially the complicated fraud transactions in financial industry. So we need to take in mind what we covered from the previous chapters to implement in the complicated studies as we will discuss in this chapter. So with this quick introduction, let us jump to chapter 12, which will talk about the complex frauds and financial crimes. Before we dive into the type of crimes that are complicated, especially in the financial industry, we need to differentiate between two different types of criminals. One, we call them accidental fraudster, the other one, predator. The accidental fraudster, it's a normal person, and this person usually is a good person, but he commit fraudulent transaction for the first time. So he is by default a first time, maybe second time offender. Usually middle age is not young, because the young people, they are afraid of committing fraudulent transactions because it will damage their future. But once the people become mature into their position in the company, they might think of fraudulent act. And most probably it could be male. There is no exception for female to commit fraudulent transaction, but the majority are male. They are married with the children, and they have confidence from their peer in what they are doing. So they are trusted employees. Usually they take senior position, either department manager or maybe executive management, because those people, they have access to a lot of information and they know how to make a good cover up for their fraudulent crime. And they are good citizens in the community. They might have good reputation. People, they look at them, but the predator, and usually before they take the fraudulent act, they have some kind of pressure or incentive that pushes them to go for the fraudulent act. And good example, if one of the family members has a critical medical situation, and the person needs some cash to pay for this medical treatment, this might be a good cause for fraudulent act. Or maybe tuition for the school of the children, this can be another pressure on the fraudster to commit fraudulent act. And of course, the impact on the community, when the people hear about this fraudulent act, they get surprised. But the predator is on a different scale. The predator usually commits more than one fraudulent act. And this person is usually organized, and this person starts as an accidental fraudster, but usually once he gets hired, then he starts to plan for his fraud. And most of the time, the predator doesn't have any conscience. He has good justification for what he's doing, and he can make a good coverage after committing the fraudster. And he is well prepared, by the way, to deal with the different auditors and the examiners. How this predator is working, usually the predator for big complicated cases works with another individuals or organization. They can collude together, or organization from different geographical jurisdiction, they can collude together. So don't feel that the fraudulent transaction is committed usually by one person. It could be by multiple persons within one organization or in different organizations, and within one geographical location or in multiple geographical locations. And when we look at the fraudulent act itself, we see that not all the activities or the process in this act are illegal. Most of the time we see legitimate transactions happening, but mixed with illegal activities. And this is the typical fraudulent case. So when you look from the outside, you feel that the transactions are legal, but when you jump into the details of the case, you find there are some steps are illegal. And the examiner has to isolate the illegal activity from the legitimate activity to distinguish the original organization that the fraudster belongs to. And of course, we have to keep in mind that the fraudster might be looking for money or ideology or coercion or ego, which we explained it in previous video. So we have to think about those motives for the fraudster. And if the fraudster, whether individual or organization, they took some assets, then we have to look for those assets and start to dismantle the organization and take away the ownership of the assets that have been acquired by the fraudster. And here we have to keep in mind that there are some schemes in the financial crime usually align more with predator than accidental fraudster. When we look at the schemes, number one, we look for the intention or the motivation. Why the predator or the predators, they came together to make this fraudulent act. They usually have criminal intent and they usually are organized. So you don't find the details very easily. You have to search for it. And they usually are tech savvy. So they know how to play with technology, with database, with programming. And then they start to make their fraudulent act very sophisticated. So for a normal or junior examiner cannot find it out. When we take this whole concept into the financial arena, we will see that the financial statement fraud are usually complicated. They involve the executive management because those are the people who give approval to the different adjustments that might happen to the financial statements. And they work together to make exceptions to the internal control system. So this is what usually happens. And the scheme could be bribery, could be illegal gratuities, economic extortion, or conflicts of interest. And at least one party, or possibly all parties, they set out to achieve certain goals here. And when I talk about the different types of schemes, remember, money is one of the ultimate goals, but it's not everything, by the way. So maybe we can make criminal act to take a bigger market share. So we use illegal activities, try to grab the market share for our company, or to try to make illegal competition. So we don't see money in this issue, but it ends up to have money involved in the long run. The Organized Crime Control Act came out in 1970 to fight against all these illegal activities. Many organizations involved in organized crime are professionally run, either opportunistic or diversified or political support. And because of that, the Organized Crime Control Act came out to fight against this kind of organized crime. The organized crime, they usually manipulate and monopolize the financial market, as I say, trying to grab better market share or make oligopoly with different competitors to control the price in the market, infiltrate the labor union, align with traditional businesses, purchase political support, and usually this happens from the big corporations who might have political connection that can support them in case the fraudulent act has been discovered. They understand how the flow of the fraudulent act is working, and they try to make some kind of coverage against any discovery could happen from the forensic account. Good example here, the drug trafficking. The trafficking of narcotics for illegal sale in countries all over the world. This is a very good example of organized fraud. Countries from partnership countries, they form partnership to tackle illegal drug problems. And we can see this in the developing countries where the law is not really enforceable, and the countries, they try to boost up their economy by going into this way of drug trafficking. Illegal drug trafficking, they cost about $17 billion annually. Probability of detecting drugs drop considerably once they enter the US, because in some countries and in some states, they allow different types of drugs, and this can actually make the fraudulent act increase. So drug trafficking is one of the organized fraud. Another one, terrorist financing. And the terrorist financing here, it's either we give them straightforward, we give them cash, or we support them politically, or we make some kind of protection for them. So the terror organizations, they need fund. They deny terrorist group access to the international banking system. So you don't know how the flow of their funding going among the international banks, but they put different fictitious names and different companies in different states. So through these sham companies, they can collect cash to fund for their terrorist attack. And the terrorism triangle is opportunity, ideological motivation, ideological rationalization. It's very similar to the triangle of fraud, where we have opportunity, where we have incentive or pressure and rationalization. So they use the same concept of the fraud triangle in terrorism triangle, where people, they have motivation to inflict terror, and they have ideology comes from sometimes the religion or the different ideological, they get it from the community. So this can create the terrorism attack. And the last point we need to discuss in this video is money laundering. Money laundering here, it comes from fraudulent act, and it's usually place the money into the financial system by taking the money from certain activity like drug dealers, and they use the cash to buy real estate. So here they make layering or disguise the source of money, and then they sell the real estate for a cheap price to show there are some cash comes from real estate sales, and this will be integration of the income into the financial system. So why we do that? Because if you show a lot of cash comes from drug dealers, this might raise a big question mark before the law enforcement, and they might confiscate the cash. So the money launderer, they use those three steps, placing the cash into the economic system by buying assets like real estate, expensive cars, or maybe airplanes, or some factories, or bankrupted company. They buy them by paying cash. And then they sell them at a very low price for the sake of getting some cash into the financial system in a clean way. And then they take the cash from this one, circulated through the banking system. So this is in brief how the money laundering is done. To prove money laundering, the government must demonstrate financial transaction was attempted or conducted. There is some kind of cash came out, and then the defendant knew the proceeds derived from unlawful act. So for example, when I buy a real estate by getting cash, this means that the seller of the real estate, he knows that this cash coming from money laundering. The property derived from a specified unlawful act, and then the defendant attempt to accomplish one of the following objectives: promote a specified unlawful act, conceal the nature, avoid the federal reporting, and evade the taxes. So we have to prove the source of cash and the seller of the fixed assets awareness of this cash, and there is no way that the person has reported, and this can validate the case of money laundering, where both the buyer and the seller, they get confiscated for them. So this is in brief a good introduction of the complicated financial crime, and I will continue the discussion in the coming videos. Thank you. Bye-bye.